You're watching Mirror 7 News. Stay informed, stay ahead for more news.
Alphabet's Class A shares, better known by their ticker symbol GOOGL, saw some noticeable trading activity recently that caught the attention of market watchers. The stock ended the session down about 1.57%, which translated to a decline of $3.33, leaving the share price near $209.57. That drop wasn't massive on its own, but what really stood out was how the options market responded. Options traders were showing signs of moderate bearishness. For context, options trading is where investors place bets on whether a stock will move up or down, often using calls for bullish positions and puts for bearish ones. On this particular day, roughly 112,000 contracts were traded, which was in line with the usual volume. However, calls were still leading puts, with a put-to-call ratio of 0.62. Normally, that ratio tends to hover closer to 0.5, so the small uptick reflected a bit more interest in downside protection than usual. Another detail worth noting was the rise in implied volatility. Implied volatility, often shortened to IV, reflects the market's expectations for how much the stock might swing in the near future. In this case, IV, for 30 days out, ticked up by 0.2 points, reaching about 31.2. That level stood above the 52-week median, suggesting that traders were bracing for sharper daily moves, with an expected swing of around $4.12 per day. In other words, the options market was signaling that investors anticipated more turbulence ahead. The put-call skew also steepened, which essentially means traders were paying more to protect themselves from a potential decline in the stock price. When skew increases, it indicates stronger demand for puts compared to calls, a pattern often seen when sentiment tilts cautious. Altogether, the activity painted a picture of investors hedging their bets. While many still leaned on calls, the extra demand for puts and the higher implied volatility both hinted that traders weren't ruling out further downside. Alphabet, of course, remains one of the largest and most closely watched companies in the world, so even relatively small shifts in sentiment can ripple through broader tech and market conversations. For investors, this type of activity doesn't necessarily mean Alphabet is headed for a big fall, but it does suggest a heightened sense of uncertainty. The options market often reacts quickly to shifts in sentiment, and in this case, it was clear that caution was creeping in. Whether that caution proves justified will depend on upcoming catalysts, earnings results, and the broader market environment. For now, traders appear to be taking a more defensive stance around GOGL, even as it continues to be a heavyweight in the tech space. Stay subscribed for more videos.